Fear paralyzes, but not everyone. Oh, you're opening your app and seeing red everywhere. Someone else is smiling, because for them, a collapse is Black Friday. They don't run from the fire. They buy in the fire. What you call a crisis, they call an opportunity. You think everything is falling apart? To them, it's just the clearance sale before the next peak. They know that collective panic is the exact moment when assets transfer from the impatient to the prepared. They don't need to predict the future. They just recognize the pattern. And the pattern always returns. Crisis, despair, forced selling, devaluation, and then recovery, profit, silence. Have you noticed? When the media screams recession, the rich go silent. They're not on TV. They don't give interviews. They don't explain the chaos. They do one thing. They buy quietly, discreetly, without headlines. But when everything improves, they reappear. With new properties, more stocks, bigger dividends. It's not luck, it's calculation. They buy when blood is in the headlines. They invest when you retreat. They stay silent while you panic. Because real opportunity doesn't show up with applause. It arrives in fear. They feed on the irrational behavior of the masses. While the majority runs, they collect. Every amateur investor dreams of buying low and selling high. But almost no one actually buys when it's low. Because when the market truly crashes, it doesn't look like a deal. It feels like the end of the world. That's why so few take advantage. Fear dominates. Uncertainty paralyzes. And instinct screams run. But seasoned investors are trained to resist instinct. They understand that in chaos, price and value disconnect. That's when real opportunities emerge. Not on calm days. Not when everyone feels confident. But when no one wants to look. The darkest moment is the most fertile for those who can see, and the rich. They see without needing light, while you're searching for when things will get better. They're studying what's now too cheap to ignore. They analyze companies like planting seeds. They look at the root, not the flower. They ignore the noise. They watch the fundamentals. If the base is strong, the drop is a gift. They don't try to guess the bottom. They accumulate on the way down. Because they know time is on the side of the patient. You want stability before investing. They build stability by investing in chaos. You wait for the storm to pass. They build shelter buying roof tiles while everyone else is running. In the end, the winners aren't those who waited. They're the ones who moved when nobody dared. The market is driven by two emotions, greed and fear. Greed inflates prices, fear crashes them, but fear does it faster. That's why real millionaires are made during crashes, not during bull runs. Not in waves of euphoria, but in total chaos. That's when smart capital moves in. No attention needed. The crowd rushes to sell. The rich show up to buy. They see with logic. You feel with fear. That's why they grow when you freeze. Fear fuels the sell-off. But it can also fuel profit. Depends on how you use it. Let's look at history. 2020. Global pandemic. Lockdowns. Unemployment. Chaos. The world froze, and the market dropped more than 30% in weeks. While most people were logging in just to see the damage, others were logging in to buy. Amazon dropped, Apple dropped, Microsoft dropped, but their fundamentals were intact. It was fear, not failure. Those who saw this doubled their net worth in under a year by doing nothing more than waiting, because time can do for you what panic never will. Patience was the strongest asset of 2020, and it will remain the secret weapon for the next crash. If you have vision, the secret is not guessing the bottom. It's not running from it. The rich don't try to hit the exact turning point. They know that's an illusion. The bottom never announces itself. You only see it in hindsight.
That's
why they use a strategy called progressive positioning. They enter little by little. They invest in strong companies, even if they might fall more. Because in the long term, today's price becomes irrelevant. Focus on value, not panic. While the masses wait for the right time, the rich understand the right time will never feel comfortable, but will feel terrifying. And that's exactly why it works. Discomfort is where opportunity lives. There's a phrase that professionals repeat like a mantra. Be greedy when others are fearful. It's not about being heartless. It's about studying collective behavior and doing the opposite. The masses react. The smart anticipate. When everyone is optimistic, they start to exit. When everyone is panicking, they quietly enter. They don't do it emotionally. They do it based on numbers. It's on logic, on patterns. Markets reward rational thought in the middle of emotional chaos. If you can breathe while the world freaks out, you can buy assets below their real value while everyone else is focused on loss. And the payoff comes months or years later. When the crowd returns, the prices are already gone. The difference between the average investor and the professional one lies in the questions they ask. The average asks, will it fall further? The pro asks, is this asset still good, even if it falls more? That changes everything. The first one tries to predict the unpredictable. The second analyzes fundamentals. If the business is strong, cash is solid, profits continue, then the fall is just a temporary discount. It's not about timing, it's about conviction. The average investor depends on market mood. The professional depends on their own research. That's why they buy confidently in chaos. And when the market recovers, because it always does, the return isn't just financial, it's psychological. It's proof that resisting fear pays more than obeying it. Ever heard of DCA? Dollar cost averaging. It's how people survive volatility without losing sleep. You invest the same amount every month in strong companies. When markets are up, you buy less. When they're down, you buy more. Your average cost balances out over time. You don't need to guess the bottom. Just stay consistent. This strategy beats 90% of emotional investors. It doesn't look fancy, but it works. Because the secret isn't pulling off the best move ever. It's doing the right thing over and over, quietly, patiently. Without panic, most people lose money for one reason. They buy on hype and sell on fear. They enter because someone told them to. They exit because someone scared them. It's predictable. And that's exactly what smart money uses. They don't follow movements. They observe them. They study patterns. They identify emotional cycles and profit from them. When the crowd is euphoric, they distribute. When the crowd panics, they accumulate. This is a behavior game before it's a finance game. They profit off your fear because they know most people can't handle watching their own portfolio bleed. But they can. That's why they grow during crashes and leave richer when calm returns. While you regret, they reinvest. Fear is collective, but action is individual. In the next crash, will you repeat the same pattern? Will you sell in desperation? Again, will you wait for the media to say it's safe again? Or will you be cold enough to study the fundamentals, trust your research, and position yourself? That decision changes your future, because real opportunities never come with comfort. They appear when no one is looking, when everyone is crying, when prices fall, but value remains. That's the space between panic and potential, and the rich step into it. Those who enter there harvest wealth the rest never knew existed. You don't need millions to do this. It's just clarity, consistency, and silent courage. You want to know how the rich get richer in a crisis? They buy what others fear. They buy strong companies during weak times, but not passively, strategically. While the market sobs, they accumulate. While the indices drop, they build positions. They do it without noise. No headlines, no spotlight. Just quietly, consistently. Crises don't scare them, because they do. No, the cycle always returns. And when the tide turns, it always does. The rewards aren't small. They're massive. They don't press sell. They press accumulate, because panic is temporary, but wealth is forever. This isn't a secret formula. It's behavior. It's mindset. You can learn it. You can apply it. You can start small. But you need to understand, those who thrive in crises aren't the smartest. They're the most prepared. While others chase shortcuts, real investors build roads. You don't have to get everything right. Just don't get the basics wrong. And the basics are simple. Don't buy on hype. Don't sell on fear. Study what you're buying, and be patient enough to harvest. Most people want speed. The rich want power. And silent power is built slowly, in confusion, in noise, in the fall, where no one wants to be. Crisis isn't the end. It's the beginning of a silent redistribution between those who understand and those who react. between those who wait and those who act. With every collapse, billions change hands. People don't notice. They're too busy trying not to lose. But those who study, observe, and act, they win. In the next crash, you don't need to be a genius. Just be ready. Ready not to run. Ready not to repeat, because the rich don't. Make announcements. They move in silence. They buy in panic and vanish in the rally. And you, will you regret or reposition? They won't warn you. I just did. They'll never see you coming. If this opened your mind, follow the channel for more silent strategies they don't teach. Watch the next video, because the system won't stop, and neither should you. Link in comment. Download the guide that shows you how to build wealth while others panic.